Okay, welcome everyone. We'll start our lesson 2. Today's lesson will go through LO2, which is learning outcome to understand the role of accounting and accounting record within an organization. So before starting this session, first of all, we recap, what we learned during our last session. So anybody remember anything from last lesson, please? Do you remember what we discussed last session?
My blank.
If not, we can recap first, yes? So then we can go through. So last lesson we discussed about understand the relationship between organization, ownership, nature of financial statements. So we discussed types of ownerships. Last lesson, yes?
Yeah.
We discussed sole trader, partnership, limited companies. Then other than that, we discussed financial statement, how many types of financial statement we prepare in accounts. So we discussed types of ownerships. We discussed types of financial statements. We know how many types, we all know, yes?
Yeah.
We discussed statement of financial position.
Income statements and manufacturing accounts.
Excellent. Great. So we did manufacturing accounts. So we discussed statement of comprehensive income, which is also known as P&L. We discussed statement of cash flow, what we call cash flow statement, and the last statement of statement of change in equity, we call shareholder statement, and we discuss about manufacturing accounts. So that's all we discussed during our last lesson. We mentioned IAS 1, International Accounting Standard 1. I mentioned IAS 7, and we discussed IAS 2, which is about inventory, cash flow, and presentation of financial statement under IAS 1. So that all was in lesson 1. Today lesson will go through basic double entry as per the learning outcome. So we all know, can we rate ourselves how much we know about double entry? We know all type of adjustments, yes? End of year adjustment, accrual prepayments, yes? So all we working in accounts, so maybe we have a really good understanding all these areas. Okay. So that's double entry bookkeeping, always based on the rules. So today lesson will be preparation of ledger account, asset liabilities and capital. So we learn about accounting equation. What is the accounting equation? Is equal to assets, asset equal to liabilities, and liabilities plus capital equal to assets. So if you do other way equation, you do assets minus liabilities is equal to net asset, and net asset figure is always equal to capital. Anybody any question, please? Is it okay? Yes. So net asset always equal to capital. So if you know net asset, you know your capital. Sometime if you need to be find the capital figures, we can do this way. Okay, the posting transaction in ledgers will go through how we can ledger and making transfer to final accounts, interpretation of ledger, their balances. Will go through different types of sale ledgers, purchase ledger, nominal codes, nominal ledgers, and these all our discussion will be. So if you're a bookkeeper, your role is normally to prepare up to the trial balance. If you're accountant, you're preparing from trial balance to final account. So that's the key difference between two roles. So bookkeeper and so first we have assessment criteria, explain the role of accounting record keeping within our organization. The term accounting is used to describe the process which we provide the financial information in shape of financial statements in records, in these ledgers, bank reconciliation, all these are the records for the purpose of decision making. Decision making means selecting the best course of action. We always make decisions, sometime intentionally or intentionally. Better to be we have a write all the option, we have all the information, then we pick the best option. Control. If we don't have a control, of course, we can't use our resources effectively. What we plan should be control in place, then we can achieve our objective, whatever we're supposed to achieve. So identify and classify, recording the transaction, summarizing and reporting the business transaction, then analyzing in shape of ratio analysis, which will go through some point, how we can use, how we can, different people can interpret accounting information different purposes. So bookkeeping is the process of recording the business transaction in the book of account. Two systems are mainly used: sole trader with single entry system can be, where the larger firms more complex double entry. Especially in military, in army, they use the single entry. They're not telling where the source of supply or where the actual transaction happen, number of reasons. So very few businesses will use the manual bookkeeping system. Now is we have a different software. We have a Sage, we have a Zero, we know the Pexis, cash flows, and various other software. I'm not sure which one you're using. If you want to learn about Zero, it's a free course is available. If you want to do, I can send you the link. If you want to do Sage, Sage University is offering free courses again, so you can learn about the software. Because accounting is more based on the software now instead of just manual accounting. Anybody any question?
No.
Okay, then bookkeeping, part of accounting. So accounting is recording, classifying, summarizing, reporting, analyzing, and interpreting. But bookkeeping is a part of accounts as well. So bookkeeping, when bookkeeping finished, final accounts basically start. So bookkeeping may recording of the business transaction. That's more about the recording the transaction. Then interpreting and making the decision and putting right in the right account. That's all about accountant role. Okay, the accounting concept is very important. So the accounting concept, we always need to be, first of all, make sure we record the business transaction. Those reflect in account true and fair. We should provide the true information. Business entity concept, the bookkeeper and the accountant treat each business as though it were the independent units. Yes, so we should be say the business is an independent unit. Business is, or we call organization is an artificial person. So the definition of organization, the concept mean we need to be look around in accounting, and the business and the trade and the financial statement should be recorded separately in account through double entry bookkeeping system. So a couple of you heard about creative accounting. Do we know creative accounting? Some people are very creative, yes? So what is about creative accounting? Like a couple of you heard about Enron, World Telecom, yes? Even Carillion company, construction company recently collapsed. So creative accounting. So we need to be, that's why the new standard carry on coming to reduce these bad practices and bring a more transparent system. Okay. So when we look the invoices, in especially in the sales and the purchase, you look at the buyer, you look at the seller. So when you do audit or the control, you can look around where it start, how you get the quotation, how you select the supplier, have you raised the purchase order? Is this the same person raising the purchase order? Same person is paying cash. So we have a poor control there. Segregation of duties we can look around. Delivery node, yes, invoice, and then statement, remittance, how we often reconcile as well. So that's all is about the 2.1, where we can look around the record, the importance of records. And then second, we have 2.2, explain the double entry accounting techniques. So double entry is the purpose of accounting to ensure system transactions are correctly recorded and gathered together into the period in order to prepare the set of financial. To ensure the business keep the track all the assets and activities, facilitate the measurement of the business performance, help to obtain the financial and other form of, and meet legal requirement. So accounting start with the transactions. Then we have a primary document. Do we know what sort of document can be primary document which we must keep as record? What do you think sort of document can be primary documents? Our book of prime entries. We all know.
Yeah.
Okay, so primary invoices, purchase order, and the book of prime entries, sale day book, purchase day book, and ledgers account, which we can look around the journal ledgers, and then for each transaction will be primary documents and enter into the book of prime entry as the prime record. So transaction cash sale is the cash is if debit, and the sales is the credit. Double entry bookkeeping, which we'll go through the rule in the next slide. Then we have a primary document and the book of prime entry, so separately. But in the past, we used to be record everything in the journal. Yes, and then we transfer used to be from journal to the ledgers, not used to be separate books, but traditionally accounting. But now, of course, book of prime entry, where everyone is working separately, with all the data embedded into one place. And the dual effect. When we look any transaction, it has the dual. It's debit and credit, is in and out. So separate entity concept and then accounting equation, which we already mentioned. Okay, please to remember easily, we double entry debt click. We use the word. What goes on the debit side? Expenses, asset drawings. When increase, when decrease will be opposite. Opposite debit is a credit. So when credit, when increase all liabilities, when income increase, when capital increase, we do credit. But when those decrease, so we should reverse it. It means we do debit. Okay, so this is all being here summarized as well. Assets always we do debit, when increase, when decrease we do credit. Liability, when increase we do credit, when decrease we do debit. Income, revenue, expense, and capital. So these all the treatment of double entry bookkeeping. I copied the link for you in the video. If you want to watch later on, you can as well. So this is all about double entry bookkeeping, and that's your debt click concept we need to be follow, and we can record various transactions in the book of account. If anyone is really interested to learn more advanced bookkeeping, double entry bookkeeping, I can send you the handout separately. Yeah? So that also help you. Okay, next now we're looking 2.3 double entry accounting technique to record the financial transaction. So think about here, we record some financial transaction here. We bought a motor vehicle for 10,000 cash. So what is a motor vehicle first? You have to categorize it. Motor vehicle is an asset, is an expense, is an asset. So when asset go up, we bought it. It means asset increase, we do debit. What is decreasing? Cash is also asset, cash is decreasing, so cash will be credit. Paid creditors, when we paid to creditors 1,000 by check, so the creditor was the liability which we supposed to pay to individual or suppliers for suppose. So P-Lake we paid, and we paid through bank. So these all the double entry based on the debt click rules will be recorded. You want me to go through each transaction? Are you okay? Anyone any question? It's fine. Good. Okay, let's now sale ledgers, control account. We also call trade receivable. So three terms we use for the sale ledger control. We call sale ledger control, we call debtors, and we call trade receivable. So these interchangeable terminologies we carry on using, but the same thing. Why we have a sale ledger control? Why we have a debtors? Due to the credit sale. If as a company we have a policy, we're not selling anything on credit, then we don't have a trade receivable. It means we don't have a sale ledger control account. Okay, so sale ledger control account mean our receivable. What about the sale ledger? Sale ledger is a subsidiary ledger where we can see to whom we have to receive money and when we have to receive money. So we have to reconcile our sale ledger control and the sale ledger. The purchase ledger, which is sale ledger control, is our asset. and the purchase ledger control is our liability. These are our creditors. These are mean trade payable. Why we have these? Due to the credit purchases. If we don't have a credit purchase, if we don't have a purchase ledger control, okay, so invoice for sale, sale ledger control, and the sale ledger, and these all the transaction we can record. The transaction invoice for purchase goes in the purchase ledger account debit and the purchase ledger control account credit. Vice versa. These all the transaction we can record into different ledgers. Okay, then we always need to be balancing. So we like we have a capital. So if we'll do the double entry for suppose injected 10,000 pounds in business, so 10,000 will be debit in the bank because the money coming in the business, and 10,000 is a capital. So my debit and credit will be cross. So when the ledgers always cross reference. So capital here you will see under the capital ledgers you will see the bank. So we can look around the double entry. There is a debit, there is a credit. So you can see debit and credit effect, on each. Non-current asset, we paid 4,000 to buy non-current asset, and we purchased under the non-current asset is a debit and the bank is a credit because the cash is went out. Okay, balancing ledgers always. So if my debit and credit, my debit side was 10,000, my credit side was 4,000, so my balancing figure closing balance is 6,000. So thus we came here on the credit side, but when we will prepare the trial balance, my bank balance will go on the debit side, which is the opposite side. Balance brought down will goes on the opposite side. Balance carried down goes normally on the opposite side. Anybody any question here?
No.
Okay. Next we have we discuss accounting equation like here non-current asset plus bank. We have a 10,000. We don't have a liability. It means we have a capital. Okay, then 2.4 we have to prepare the trial balance. From the double entry accounting record we can prepare the trial balance. So at the end of accounting period, each general ledger's account is balanced off. So the balances are collected in the trial balance. If the double entry is correct, the debit and credit should be equal. So my sale ledger control here 10, and my balancing figure in this case is a 2. That will be balance brought down in the next period. Okay, so now you will see this is the example of the trial balance. We have a sale goes on the credit side, that click. Purchase goes on the debit side. Sale ledger control, purchase ledger control, bank, capital, loans, and all these. Yes, these are expenses. Goes on the debit side as per that click. Okay, then we been again. What do you think? This one, capital, which side? So we'll test ourselves. Capital, which side will goes?
Debit.
That click, when you use the word that click. Yes. So what is a click? So what goes on debit? Expense, asset, drawing. When increase, credit, liabilities, income, and capital. So this goes which side? Capital? Credit side. So my capital is a credit. Cash at bank, which side? Cash at bank, which side will be? Anyone? Cash at bank will be at the debit, is the asset. Furniture and equipment is asset, debit side.
Assets, debit side, yeah.
Well then, okay. Purchase ledger control, which side?
Credit side.
Brilliant. And what is this? Is a liability.
Liability.
Yeah, liability.
And VAT owing to. What is this? Owing.
Credit side, liability.
Excellent, great. So cash sales, what is?
The receipts, it's revenue.
Yes, if the cash we receive, of course, is revenue, but the sales is goes on the credit side, cash itself.
Credit, yeah.
Or on the debit side. Purchase.
Debit side.
debit side, and vice versa. Expenses on the debit side, interest received is the income on the credit side.
It's debit side, yeah.
Interest,
Expenses and bank and interest debit side.
no, if we receive the interest,
Yeah.
interest
Then credit side, yeah.
that's the credit side. So vice versa, we can make all the adjustment, and then we can see my debit and credit should be equal.
Yeah.
Okay, that was the cash sales, not cash received. So that should be linked with the cash already there, not given, but we can assume it. So my debit and credit and my trial balance should be look like this. From this we can make now profit and loss and balance sheet. So what goes in the profit and loss? What we think? What sort of things? So you can start with the cash sales, yes. Sales and the revenue or the turnover is the same.
Purchase, expenses, cash sales, furniture and equipment goes to the profit and loss.
No, furniture and equipment goes to balance sheet.
Yeah. Sorry, it's assets, right?
That's it, yes. Then purchase ledger is liability in the balance sheet, yes. VAT is a liability in the balance sheet, capital in the balance sheet. Then the profit for the year, what will come, that will go also balance sheet, then our balance sheet is balanced. So that's, and then I copied the link to test your understanding. What you can do in your own time, you can copy this link, please. It's always good to be, yes, look around. My concept is still, working the way we learn in the past, maybe. Yeah. So you can look around. What is the invoice there? Yes, you can fill it. Yes. So if you look in this one, suppose we have an invoice delivery note there. We have, so how much quantity we have? 100. Yes, code is there. We need to check what was the price. Yes. And then we've been given £1 each. Yes. Plus VAT 20%, and is given trade discount 20%. Yes. So you just need to fill. What we see is the quantity is 100. Yes. So you can, when you click it, it shows here I'm right and wrong. So at the end will shows you all the answers as well. So please do in your own time. Yes. Is it clear?
Yeah.
So please carry on doing by clicking next, then afterwards. Yeah. So like financial documents is sent by suppliers. Yes. So what is can be.
Okay. Sorry, I have a question about the VAT rate. Is there any flat rate to choose?
There we in these invoices normally, because the flat rate can be in the goods, or the guidance should be provided. Or when we do the VAT return, yes,
it's standard rate 20%.
Need to be look around the category of the goods. Like falls in which category. Here is a given state standard VAT 20%. So trade discount we trade off, yes, which is 20% at the price, listed price. So we can reduce it accordingly, and then you can put it. Okay, then next one, if you suppose you can click the box, you can say I'm right or wrong, I'm right or wrong. If not, yes. So think about is it why? Yes. So you can go through all these, yes, cash books and various, and that's quite good, to be practical. Look around the concept. Anything you not get, use the snipping tool. Take the picture and send to me. I'll explain you too as well. Okay. Then further, I included the link for you for reading, please. Is a Kaplan if you want, and another link, the accounting coach ones is there as well. So these all there. So today lesson was just the basic double entry bookkeeping. See, the main rule is that click, please keep in mind. And if you want me to separate handout, I'll send you the double entry bookkeeping handout as well. So where it can be, or if you do the just test, will be fine. Will cover and will be help you to a bit, recall your concept. Okay, that's all today really from my side. Anybody any question? If you have, you can ask.
Yes, I have a question. Do you teach QuickBooks?
Yeah, I can teach QuickBooks, which is basically is the same rule, which is based on like Zero or any other software. Really, is that nominal, the chart of accounts can be different.
Okay,
Page,
understood.
Zero, and QuickBook, and these are the basic logic is exactly the same. Okay, only the integration can be different.
Okay,
Slide.
and which like software is the most comfortable to use for pay slips, payway,
You can use it's called Sage Payroll.
Sage Payroll? Okay,
So
because I use the Cloud 21, I guess. Yeah,
is Sage Cloud.
Cloud 21 or
Cloud
12.
it's fine. It need to be think about the integration with the HMRC in terms of the tax
Yes.
reporting side. Otherwise, is just how you set up the codes and things. That's the setting up really implies and the wage rates and things. That's because and plus integration into your final accounts. Your wages or wages control account. Wages
Okay.
expense.
Okay.
So that can be a bit, sometime integration in different software. If you're doing accounts in different, yeah, you done payroll in different. Either you draw the report and then do manually adjustments.
Okay.
Okay. Anyone else? Any question?
No.
Okay, brilliant. Thanks. If you have any question, maybe a bit short there because that's a very basic. You're already working in accounts and double entry. I think so. You're dealing day in and out. Yes. So, but if you anything you want, and you want to enhance your concept, please go through the test as well. Test your understanding. Thank you. Bye bye. And
Thank
I
you. Bye.
see you next time. If you have any
Thank
question,
you.
drop me. Thank you. Thanks, Jan.
Cheers.
Bye
Thank you. Cheers. Thank you. Bye bye.
Bye.
bye.